Welcome to the Cashflow Project Podcast. Are you looking to better your financial situation by increasing your cash flow? Too busy to hunt for real estate deals or don't know where to start? Then you're in the right spot. Join us as we dive in and talk about investing for cash flow using multifamily real estate.
Welcome to the Cashflow Project Podcast. I'm your host, Steve Furios. Hey, back for another episode this week. So this week we've got Matt Ricciardella on the show. So he's the founder and CEO of Crystal View Capital, a real estate investment firm focused on acquiring and improving self-storage facilities and manufacturing and housing communities across the U.S. He's got over 20 years of experience in the real estate industry, and he's been a principal in over $1 billion of real estate transaction. Today, he oversees approximately $600 million in assets under management. Through Crystal View Capital, he specializes in identifying underperforming assets with strong fundamentals and creating value through operational improvements, strategic management, and disciplined execution. And beyond the numbers, he's built a reputation for dealing fairly, honestly, and with integrity, something he considers his most valuable asset. We're excited to talk on the show today about value add investing, what opportunities there might be in self-storage. They manage funds for different capital with their fund. So we can talk a little bit about that. But yeah, I'd love to get your take on the market in general, Matt. And hey, welcome to the show.
Yeah, thanks for having me, Steve. Excited to be here.
Yeah, no, I appreciate you hopping on with me and the listeners. I'm sure we can provide a ton of value to them. And so excited to have you jumping on with me and with all of them. But before we get started, for those that may not be familiar with you and kind of your background, fill us in. How'd you get started to where you are today? You've obviously had a long career already in the business, even though you look like a young guy, good looking guy. So the business hadn't worn out too much, thankfully. But give us a little bit of your backstory. How'd you get started in the business?
Yeah, I've been in the business for 20 years. I got started really young. And it's an interesting stage or road or journey that I've went through to get to where I am today. I started in New York, is where I grew up originally, grew up in the family restaurant business. And as a kid, I started very young, working for my dad. It was a family business. I was washing dishes, making pizza. It was Italian restaurants, and learned very early on the value of a hard day's work and making a dollar. And I think that's a lesson that kind of translates through even what we do today. But I did, at that age, wasn't that bright, but I was bright enough to know I didn't want to get into the restaurant business. And the other thing was I was not a good student, just was lucky to get through high school, dropped out of college. School was not for me. I just didn't have the attention span, probably had ADHD and all of that. And what I did know is I wanted to become wealthy. I wanted to add value. I wanted to do something special. And real estate just popped into my mind as something that I could do those things without a degree, which I'm not going to say I couldn't get. I wasn't willing to get. I felt like it was a waste of my time. So I dropped out of school. At this point, I was living in Southern California. Grass is always greener on the other side. Kid growing up in New York, you want to go to sunny California, palm trees and beaches and all that good stuff. You're in Hawaii. I don't know if you're a native, but maybe you did the same thing. So moved out there, was going to Cal State Long Beach, dropped out, and I joined a local real estate office. It was a Coldwell Banker, and started out as a 20-year-old kid. Had no leads, no relationships, no contacts, no anything, no money. But what I did have is tremendous drive. And I said to myself, there's one thing that I can beat everybody on, and that's work ethic. And that was in my control. And I would work 12, 14, 16-hour days. And the only thing I could do with no contacts was just pure prospecting. So I would get on the phone. I would make hundreds of phone calls a day to sellers. I would knock on doors. And the idea was that was how I was going to build up my business. And it didn't happen quickly, but it was like a snowball effect. When it started to happen, it really started to compound. And I went from a place 20, 21 years old. I didn't know where I was going to get my next meal. I didn't know where I was going to pay rent. All of a sudden I was making $200,000, $300,000, $400,000 a year. So that at that age, that was all the money in the world. Until one day I made a phone call. It was a cold call. And somebody said, why don't you just buy my place? And it was a duplex. It was in Long Beach, California. And I was thinking to myself, I could barely get a $500 credit card bill. I have no credit. How am I going to buy this? But lo and behold, this was the day, ninja loans, stated income, no doc. Anybody could get financing if you could fog up a mirror. And I was one of those people. And I got a loan approval. I ended up buying this place for $314,000. sold it a year later for about $700,000, made some minor improvements, released it. And I thought to myself, why would I continue to be a realtor? I'll just buy homes, I'll buy duplexes, 3 units, and I'll flip them or I'll rent them. And that's exactly what I did for a number of years. And I did really well with that. I didn't have a scientific approach, but I made a lot of calls. It was an inefficient market. These were the days when there was no Zillow, no Redfin or anything. So it was an inefficient market from that standpoint. Would buy these properties way below market, flip them very quickly, and then kind of rolled that capital. Eventually, I was looking for more passive, more predictable income streams and went into commercial real estate as an investor. Followed the same approach and actually built a team of cold callers around me. And we just showed up. We were young guys. We had discipline. We had drive. We'd make hundreds of calls a day. And that's how I built the career. And what happened was at this stage, Steve, I was doing moderately well, but I found that I really wanted cash flow. I really wanted to hone into that. That was my thesis and the model that I wanted to build for the future. And two property types kind of just popped out at me. And they were mobile home communities and storage. They had more cash flow than any of the other property types. And it was an inefficient market. Most of them it was fragmented, mom and pop ownership. The institutions didn't really own these assets. And that was exactly where I wanted to put my focus. I did and kind of made a full transition there. And from about 2006, I bought my first mobile home park, started buying storage in 2008, did that until about 2013. Did well. The problem was I never had enough capital. I had a real proven business model, the ability to buy these deals. I would self-manage them, turn them around, and really needed the capital to scale. I was on to something. I launched Crystal View Capital, Fund 1 back in 2014, and the rest is history. So that's a little bit about my journey.
Oh, that's awesome. Yeah, I can point to so many different things there along your journey that would have kind of shaped and geared you up. For one, you're bringing in, let's say, the New York mindset, and especially working in the restaurants. I worked restaurants for a long time when I was younger, and it's just, okay, yeah, those long days that you end up spending making the calls, it's, hey, this is infinitely easier than the long days that you might have spent working in a restaurant. So it's like, okay, hey, it's long days no matter what, but it's a lot comfier doing it from the comfort of the office, sitting in front of a computer or on a phone than in a kitchen or a restaurant.
You're absolutely right. I remember the days, and if you worked in the restaurant business, I was washing dishes and there'd be endless buckets of dishes that would come, and it was like you thought it would never end. To get on a phone and to make a cold call and somebody yells at you and says no, that's easy. Or you're in the kitchen, you're on the line, and the tickets keep coming out one after the other, and you feel like it's just, you're never going to get out of it. So this was, I know it sounds like hard work, and it was, believe me, but comparative to what I was doing before, it was kind of like a vacation in a sense.
Yeah, I got to imagine too. Because again, a lot of this is mindset. You had I think too many people, and I'm hearing in your story, you were not afraid to fail forward. You moved thousands of miles away. And a lot of people, for one, are not willing to do that. So it's like, okay, you're bringing in this mindset and going to a completely different market. And a lot of times, how you're saying like, okay, hey, you didn't have anything. So it's like, okay, for one, there's not much further down to go. There's nothing but upside. It's in a new market. They don't know you. And sometimes that's a good thing. So for those of us that are tuning in, for those of our listeners, sometimes you need to be in that place where you can kind of create a fresh start. Matt did that here, going to a different market, a different industry. And it's like, look, I can make of this what I want to make of it. You put it in the hard work and put it in the effort. And a lot of times that is a mindset shift that people, hey, you get comfortable around the family, because you could have stayed at home. You could have stayed with the family business. You could have done the same thing. And okay, maybe that leads to a good life for you, but totally different. There's no way that you get to all of the places that you did having not made that big shift early on.
And I'll tell you one thing too, having nothing to lose and a tremendous amount of drive, that makes a very dangerous person. When you're in that type of circumstance like I was, you could do some pretty incredible things. And once you achieve a level of success and you become complacent and you start enjoying life, that's the largest inhibitor to success moving forward. So it's like a great dichotomy in that sense.
Yeah, no, for sure. And I'm actually glad that you mentioned too that it's not they dropped out of college to pursue the career, because honestly, you saw, hey, this thing has a higher upside. And I think that's more relevant today than ever. This is years ago, but I think a lot of people, and maybe this is you tuning and listening in. It's like, okay, I don't know that I want to pursue another career. I don't know if I want to go after my master. I mean, some fields, of course, that's still relevant, that's still necessary. But as technology comes on into play now, that's a real question. I think a lot of people are asking, hey, is the juice worth the squeeze? Do I go ahead and spend a couple $100,000 on some type of education, higher level education, when you can do something like what Matt did? It's like, okay, hey, there's potential here. I can go do something else. You're listening to a podcast. It's never been easier to get more information than it is now. So then after a while, it's like, okay, I got enough information. Now I got to take action. Now I got to step out and put in. Now I've got to grind. Now I've got to I've got to make the hundreds of calls. I've got to start stepping forward.
It's interesting that you say that. And I tell my team that all the time. I tell my kids that, we're drowning in information. When I got started, you got to remember the internet was just kind of taken off at that stage. You would go to places like Alta Vista or Ask Jeeves and look. Information was not perverse and transparent like it is today. You had to really go searching for it. Now it's everywhere. What we're lacking meaning and drive and a purpose, and to put the action behind it to make it happen. If you're willing to do those things and you have that access to information that you could make intelligent decisions from, you're going to separate yourself from everybody else. But the information is not enough. Right. You could retain information all day long. If you're not willing to act in a massive way, it's not going to happen.
Yeah, no, absolutely. And I think your career, everything that you've accomplished, that's a testament to that right there. I feel like that drive, that motivation, that your effort is why you're working on your fourth fund. You've accomplished a ton, and we're similarly aged. I was around during GFC and before that, and I was in the business. We probably started at a similar time. I know all of the heartache and the pain that a lot of these markets brought, and the opportunity too. And so we're passing also through a similar time. And I'd love to we'll switch gears a little bit here, but I'd love to get your take on kind of current state of the market and what you guys are working on, what you're investing in you've obviously done multiple rounds of funds. Where do you see the market going? Are you still investing in the mobile home parks, the storage, or do you see a pivot, on the market in the horizon?
Yeah, we're heavily invested in manufactured housing communities right now. That's almost the only asset class that we're investing in. And the reason for it, Steve, is this property type is actually counter-cyclical. It does very well in down markets. So it's a great hedge. Not to say that storage doesn't perform well, but storage is oversupplied in a lot of marketplaces. The beauty about manufactured housing communities is there is no new supply coming to market because of the NIMBY phenomenon, because of the cost to develop these communities. But the thing is, on the demand side, it's growing off the charts. People need affordable housing more now than ever. So if you own existing communities, your ability to fill vacant sites is for us. I've never been in a position where I could fill vacant sites as easy as we can now, where there's more and more demand for people wanting to move into our communities. The whole stigma of trailer trash is dissipating. People just need a safe place to call home and raise their family and still live the American dream. And they're unable to do that because they're displaced and they're outpriced out of buying a single family home. They're outpriced and outmatched of renting an apartment in a lot of markets these days. So the place of last resort is the manufactured housing community. And you've got a lot of institutional capital chasing these deals. The thing about it is very fragmented, still predominantly mom and pop owned and operated. And these deals are purchased more so on a relationship. And that's where Crystal View thrives. We have a vertically integrated platform. We have an in-house sales team. We're out in the field constantly building those relationships where we could buy those deals right. And then we could execute a business plan to create value, fill vacant sites, drive NOI for our investors. And we've built it over 20 years. And it's taken a long time. And there's been some trials and errors and bruises and scrapes. But we've got a pretty clean machine today that continues to pump out cash flow. And our investors like that.
Yeah, no, that's awesome. And actually, I appreciate going a little bit back to just your story. I love that you actually tried multiple different asset classes, asset types over your years. You went beyond, okay, hey, I'm going to take beyond being a realtor and go. And I think most people, and this probably applies to the vast majority of people in general, but it's okay. Hey, I'm going to go from selling single family homes to now manufactured housing communities. You've run a span there. You found the most efficient use. You found, okay, what's going to generate the best return for myself, for my investors, where this actually makes sense. And I think most people, like I said, they kind of get stuck. They'll just say, okay, I'll buy houses. Okay, are you investing? Are you doing it? No, I'm selling houses. Okay, that's a job. I like to implement the mindset of, hey, I want to work for every dollar once. And after that, it's got to go work for me. It's richest man in Babylon kind of mindset. And also too, just what you mentioned there, I think for our listeners, you have to understand for one, there's no one real estate market. I'm sure you guys have certain areas, certain markets that you're, okay, hey, we're focusing here, or this works a little bit better in different markets than others. Then also too, the demand, like you mentioned earlier, there's a significant demand for just affordable type housing. And what one strategy may not work anymore, you got to be aware of that. Okay, cool. You're gonna have your tap dancing shoes on, and then you're gonna pivot to something else like this. That this is manufactured housing. It's like, okay, hey, you know what? This works in the up market, and this works in the down market too. People always need affordable housing, and I love that you guys are, for one, that you found that, but two, that it's been something that's been very successful for you and for your investors as well. Now, I will just ask, are you focusing on specific areas? Like whenever, let's say I'm an investor and I want to come along and join one of you guys' funds, is this exposure across different geographic regions? Is this like dedicated towards specific projects in a specific region? How does that work?
Yeah, we're agnostic to market, Steve. We're actually across all of our funds. We're in 31 different states right now. I think we're in 13 or 14 states in our Fund 4. We are getting ready to close that vehicle out at the end of the month. We anticipate we'll kind of round that out at about 130 million, 140 on the capital raise side. But really, it's not so much the geography or the marketplace. It's really the story about how we could create value at the asset level. Can we buy it? And can we come in and really grow NOI within a reasonably short period of time? Let's call it 12 to 36 months. It's not so much, hey, it's in South Carolina, or you're buying into a 6 cap or a 7 cap. I'm not saying those things don't matter to us, but what matters more is to show us a growth path on how we could really create value for our investors. And we want to buy the institutional quality assets as well. Like right now, we've got about 100 million in our pipeline that we're actively ready to close on in the next, call it 35 to 70 days. Most of that is institutional quality assets. And what that means is 200 sites and up, a really good quality of asset. We're curb streets, newer homes are in those communities, vinyl sided, shingle roof. It's really an asset type where you're going to see your larger private equity come into, and your endowments, your pension funds, they all want exposure to that asset type. So when we go to scale, we could really achieve a premium in the marketplace. And that's the value add that we provide to our investors. So that's the approach.
Yeah, no, it sounds awesome. And like I said, you have this built-in demand, of course, especially as things have gotten so pricey. And this is just a common topic. It almost doesn't matter what news channel that you're on. Like affordability is just a huge issue right now for everyone. And so if you're able to still provide a product on the marketplace that is in high demand and will continue to be, yeah, I think that's a winner no matter what. It doesn't make the thing is, if you're listening, you're watching, you almost have to be politically agnostic. It's important for you to be aware of what's happening in the economy. But at the day, yes, we vote. I don't want to get a sideline, but again, there's nobody who's going to manage your house, your finances other than you. So you have to learn how to navigate and what's going to be best for your overall investment strategy. It doesn't matter who's in office, doesn't matter. Okay, I just need to know what's relevant, what could be affecting, let's say, certain asset classes, asset types. If there are tax advantages that we can take advantage of, great, let's do that. But again, affordability is going to be key. So yeah, I really like that.
100%.
Oh, that's awesome.
And you got to find an edge too. I mean, people that are thinking of investing, where do you if you don't have an edge, how do you expect to beat the average? You know what I mean? You're just basically buying properties that are on the market. You're hiring a third-party property management company. What are you providing extra? And I know that sounds funny, but a lot of our peers and competitors, they do exactly that. For us, we really lean into our edge, and our edge is vertical integration and our culture, the ability to find these deals off market, build a relationship, buy them right, have the capital to do it, execute a business plan by controlling our own destiny of managing our own assets, growing our occupancy, cutting our costs, growing our NOI, and really providing our investors with outsized risk-adjusted returns that they could almost achieve nowhere else in the marketplace for these two particular niches. And for our investors that are investing in that, they know they can't go out there and replicate what we've built. They know they can't invest in anyone else who could deliver what we could deliver. So we have a true edge. And when you have one, you really want to lean into it until it doesn't exist anymore. And we believe it's going to exist for many years to come.
Yeah, no, for sure. For sure. Yeah, no, it's an awesome model. And like I said, again, you're playing it to strength. That's the thing. It's like you always want to, okay, how you want to identify, you're looking at any type of investment, looking at any type of, what's my unfair advantage? And having vertical integration that you guys have, that you have a lot of benefits of scale. I don't think most individual investors, they'll never experience that like that. Okay, before when you were selling houses, oh, maybe okay, I pick up an investment property or two. You're going to have to do either self-manage or third party management, just like to your point. And I feel like a lot of people don't fully understand, okay, what is vertical integration? Vertical integration means that you own like all of the pieces of the chain that you would need to control it. They're necessary for having a thriving business. In that case of, okay, if you have in-house management, guess what, guys? Property management can make or break your deal, especially as you get to these larger asset types. You've got 100 units. Guess what? Those need to be managed correctly. That becomes way too much of a bear for you to ever do solo. And so it's like, okay, then you're going to hire that out. Well, yeah. Okay, then you're going to be paying for that. And they're not going to be caring for that property, your asset, the way that you would as an owner.
That's right.
If you have it under one house, you have it under one umbrella, guess what? My success is your success. It all works together. And too often there's a lot of money that's left on the table because of those operational inefficiencies that happen when you have to outsource to somebody else. And I give you guys a lot of credit because if you're invested into that many markets, that many states, to build teams in each one of those markets, it's a bear. Guys, we've done it. Hats off to you, Matt. It's a lot. Like how you're saying, to be able to try and replicate that it would be a non-starter, I think, for most people, most operators. And you've got, only because you've been in the business for as long as you have, developed the relationships as long as you have, are you able to execute at that high level?
Well, I appreciate you saying that. That's the hardest thing in this business is the people. At the end of the day, the real estate itself doesn't create problems. It's just dirt. It's roads, it's improvements. That's the easy part, managing all of that. It's the people that come along with it, not only the residents, but the people that work for you. It's very difficult. And you need a very trained team to kind of go out there and inspire these folks and show them, hey, there's incentives if you deliver. And if you don't deliver, this isn't a place for you. This is not a place. In the whole corporate hierarchy, Crystal View is probably the last place for those who kind of hide out and live under that corporate umbrella and that hierarchy of, hey, I know this person and I have a great resume and I have a pedigree. That just doesn't work here. What works here is rolling up your sleeves, executing amongst the rest of us. That's how you really are going to earn respect. And that's part of the culture. You got to deliver extra value and you got to work hard because we all do. And that either resonates with people and those that do it very well here, or it doesn't. And those people don't last. You got to work tirelessly in building your brand and building your culture. And what comes with that is a world-class team. And you have to show up every day and lead by example. It's very rewarding. It could be a lot of fun. And to your point, some days you're just banging your head off the wall, wondering what you're doing, but you keep going and you get through the other side.
Now, I love that the fingerprints of the family restaurant are actually all over your business. And I don't know if you fully realize that or not, but it's like that extreme ownership component. The fact that hey, you know what? You can't hide out, like how you were saying in the corporate hierarchy. Like if there was just nameless, faceless drones, it's like, okay, you know what? I know everybody that works in the restaurant. We all have to pull our own weight. Yeah. You know what I mean? There's nowhere to hide.
It's hard being on the line and one guy's just standing there hiding in the cooler or something. You're going to recognize him real quick. In our business, you recognize him, but it doesn't happen that quickly. But at Crystal View, it happens quicker than most places. I'll say that. Yeah.
Again, like that, it comes through the leadership at the top. It's those core values and everything that you're implementing already to the business. It's like, okay, that's represented throughout the company. So yeah, that's great. Awesome. Matt, this is a point in our show where we have what we call our fire round, just a little bit more rapid fire, brief Q&A. Is that something you're up for?
Yeah, absolutely. It'd be fun.
Awesome. Awesome. All right. First question. What is your favorite book recommendation? Somebody comes to you and they start asking you, "Hey Matt, you're a successful business guy. Do you have any good book recommendations I can pick up and read?" And it doesn't have to be real estate. It doesn't have to be business. It can be whatever you want. It could be mindset, it could be business, it could be whatever.
Yeah, I can think of two, honestly. One is Am I Being Too Subtle by Sam Zell, who's actually the godfather of the manufactured housing industry. He saw the value of this business and supply and demand back in the early 80s, as a matter of fact, just on the need and the demand for affordable housing and how no new supply was coming to market. He really built the business off of it. Now the largest manufactured housing REIT in the world is Equity Lifestyle Properties, which was started by Sam. So an amazing book for anybody that wants to learn more about this business, wants to be a leader, run a company, be successful in real estate. And then another book is The Snowball, written by Alice Schroeder. And that's a book about Warren Buffett's life, his childhood, what molded him into who he is as an investor, his philosophy around investments, how he started his first funds, which actually we modeled when we launched our first funds, and kind of how he built Berkshire Hathaway into a behemoth by using insurance float and reinvesting that float into safe, predictable, recurring revenue businesses that grew decade over decade and just compounded, hence the term the snowball. So two incredible books I would highly recommend that has shaped the way we run our business here at Crystal View and my life.
Yeah, no, that's awesome. Great book recommendations. It's success leaves clues. And I always like to ask I always like to ask our guests again for book recommendations, because again, whatever you're reading, that's shaping your mindset. That's shaping your mind, your skills. Even just one takeaway, like one concept, can be life-changing. It really can be. Thank you for those. And yeah, for those of our listeners, you're tuning in, be like, okay, you got 2 new books to add. I don't want to say add to the stack, but you got to actually read them, and then you got to actually implement something.
Yeah, be passionate about it. Absolutely.
Yeah. All right, next question. What would you consider your superpower to be?
I don't know if I have one, Steve. If I did, it's just the ability to never quit. Quitting has never been an option. So I can't look you in the eye and say, hey, I have some abnormal ability to analyze investments better than anyone else. I can't tell you that I'm a finance whiz. I can't tell you that I'm the best manager of people. But what I can tell you is I refuse to quit. And that might be worth something, that might not be. But I built my whole career and my life off of that way of thinking. And it will never change. It's just showing up day in and day out, having that discipline. I think discipline and tenacity are the two. If you wanted to use the word superpower, it's just grinding it out at the end of the day. And back to what you said about the restaurant business, it all started there. I watched my father do that my whole life, and I'm just doing what he did. I'm translating it into another business that just happens to pay a lot better than the restaurant business.
Yeah, there you go. No, I love that. And again, maybe you're watching, maybe you're listening to us have this conversation. And Matt, that is a superpower. It's an absolute superpower. A lot of times, I love that you made a mention of that. It's like, hey, I saw my dad doing that. I saw my dad, and I learned to, okay, hey, I want to take away something from that. And I'm sure you can attest to this too. It's like whatever we do for our kids, I got a couple of young kids. It's like we're creating the floor for them. They're going to model after us. Hey, maybe you didn't have the best parents growing up. Guess what? You can change that. And if you've got kids, it's our responsibility to create the floor for them to build on. They're going to model after us. So if you know that you got bad habits and you need to work on yourself, because if not, it's going to live beyond you through your kids. So, All right, next question. If you had a time machine, you can go back and visit 20-year-old Matt. What advice would you have for him?
Great question. Great question. I think it would be keep doing what you're doing, but really think about things at a higher level. I think what I've been guilty of, back to what you called my superpower of grinding it out, I put my head down too much in the sense of it was a great strength of mine, but I also think it was a weakness in the sense of I always thought, hey, outworking everybody is going to solve all problems. And it didn't at the beginning. But by not really understanding the way that the rest of the world works, how things interconnect, and strategically building my business and my brand off of that. I'm doing that now, but I feel like I'm making up for lost time in a sense. So really thinking outside the box and thinking at a deeper level, at a higher level early would have allowed me to be a lot farther than I am today. I'm not complaining. I'm very fortunate. I'm blessed to be here. But if I did have a time machine and I could go back 20 years, I would encourage my 20-year-old self to really think at a higher level.
Yeah, there you go. Yeah, I think a lot of times I don't think we give ourselves enough credit. We get so focused on just the one step in front of us. And again, that's a good thing. That can be a great thing. But again, hindsight's 2020. But okay, can I get a bigger picture for what is possible, for what's available? That would be incredibly valuable for all of us. So if you're listening to us now and you are younger, take Matt's advice. Go big, go bigger, go more strategic, go bigger view.
I do wish, just another piece of advice, I wish I took more risk, actually.
Yeah.
I think I was too risk averse because I was so fearful of one wrong move, I'd have to basically pack up shop and call it a day. And once you got past that, I should have been more risk on, where perhaps I wasn't. But hey, hindsight is 2020. Who knew that my industry was going to blow up the way it did? There were times where I was questioning, what am I doing investing in trailer parks? But I really believed in it. I had conviction, and the market believed in it. It just took a couple decades for it to catch up.
The overnight success.
Yeah, that's right. That's right.
All right. Awesome. You know what? If our audience wants to reach out to you, they want to find out more about the fund, they want to connect with you, what's the best way for them to do that?
Yeah, you could visit our website at crystalviewcapital.com. You could reach out to our investor relations department at invest@crystalviewcapital.com. We love to hear success stories. Hopefully we could be an inspiration for somebody. And don't be a stranger. Let us know all your success stories.
Awesome. I appreciate you hopping on with me today. The listeners, Matt, all the best wishes on your wrapping up your fund. I'm sure it'll be done by the time that people are listening to this one. But hey, I know that there's got to be another one right behind it too. So better to start the conversation early. If you guys are interested in connecting with Matt, make sure you guys reach out to him and the team. But thanks for hopping on with me today. I greatly appreciate it. And we'll look to circling back with you in the future.
Thanks, Steve. Appreciate your time today.
Awesome. Thanks so much, Matt. Aloha.
Take care.
Awesome. Great conversation with Matt Ricciardella with Clearview Capital. It's always great to talk to people who have a lot of experience, for one, just in the business, but also life experience. He's a young guy, but again, there's so much that we could take away from somebody like him and his story. College dropout, went from working in the family business and restaurant to having just incredibly successful through their business funds, through their capital funds, investing into manufactured housing. Again, you want to play to strength. You want to be in a path of progress in terms of either asset class, or a lot of times it's geographically based, investing in the right spots, and just getting in front of the ball, so to speak. So yeah, great experience. Great to have him on the show. And so hopefully you guys enjoyed that episode. But guys, if you're interested in investing with us, you can also go to tricityequity.com to learn about more previous deals, type of properties that we work on, prior successes that we've had. We'd love to schedule a call with you and our team. If you're interested in connecting with me, you can find me on Instagram, SUFuros, or any of the socials. I'd love to connect with you. And then also, if you're here in Hawaii, maybe you're visiting or you're locally based here in Honolulu, we have monthly meetups every month. I cannot stress the value of community. Just one great contact, it can be life-changing. Make sure that if that's not something you're currently doing, make plans to do that. It doesn't matter where you are. If you're in Idaho or Texas, it doesn't matter. There's some kind of local real estate meetup that's happening around you, or whatever it is. If maybe it's business, there's going to be people in your market that are doing the things that you want to do. Make sure you're connecting. Being an entrepreneur, being an investor can be a lonely journey. You want to be able to make connections. If nothing else, for support, it's vitally needed. It really is. It's so easy to burn out in this business. So make sure you're connecting. So we have our monthly meetups here every month. We'd love to be able to connect with you in person, or if you're on vacation and you're out here, we'd love to, maybe you can time it, or be able to join a meetup. But yeah. And guys, if you're finding value in the podcast, of course, subscribe, share, and we'll see you on the next episode. Go ahead and take some action, guys. We'll see you on the next one. Aloha.